A first read on first quarter GDP coming in at 6.4%. The PCE price index now plus 3.5%. Joining us now, former Federal Reserve Board nominee Judy Shelton. She's the author of Money Meltdown, Restoring Order to the Global Currency System. And, oh, Judy, you're pouring a lot of cold water on me here. Now I'm worried again. I'm worried again. And we're back to thinking about the Fed and what's happening. And you make some really good points here, and that is that instead of maybe enough individual thinking on the Fed, everybody's kind of in line, and there's quite a bit of groupthink, and that leads us to where the price discovery that we're supposed to have in the bond market is obscured by what the Fed is doing, which we're kind of like flying blind. And I've been saying that maybe rates have stayed low as inflationary expectations go up. I've been attributing that to maybe because it's transitory, but that might not be it. It may be because it's being held down by the Fed being so involved in every aspect of our lives.
Well, transitory is another one of those vague words that really doesn't have a lot of meaning behind it. I think the problem with the Fed's massive intrusion into credit markets is that price discovery really has become obscured in a free market economy, and I think that's still a good thing. You use price signals to indicate the optimal use of investment capital. So you really risk the misallocation of capital, and I think you get associated losses of productivity if markets can't decipher the best place to get the risk-return trade-off that makes the most sense.
Well, at this point, how dangerous do you think the situation is in terms of what we hear from the Fed, what we hear from central bankers around the world? How do you check out of the Roach Motel, if you will, without pain? Well,
what's really striking to me is that those questions aren't being asked or voiced by central bank officials themselves. That's why I'm concerned about a certain uniformity of opinion or groupthink. It turns out that during these extraordinary times when we're really experimenting with monetary policy, we threw everything but the kitchen sink at it last March. I think Chair Powell recently referred to that as Dunkirk. It was an emergency operation. And yet throughout the Federal Open Market Committee meetings we've had since then, we have them 8 times a year, and we've had another 3 this year. Not a single time has a member of the Board of Governors registered a dissent in voting for the monetary policy action. That is, the governors always vote in lockstep with the chair. Now, in a way, there is a certain collegiality. I won't say gentlemanly these days, or maybe they don't want to send mixed signals to markets. But I don't think it's because they've always been right, because we've seen that even during the phase when the Fed was raising rates from 2015 to 2018, only to take them back in 2019, if anything, that was erratic monetary policy. And the Fed members now seem to look upon that as having waited too long to raise rates or having gone after it too aggressively. So it's comfortable to have consensus, but it doesn't mean it's always correct.
Shepard Smith here. Thanks for watching CNBC on YouTube.